Welcome back to Fast Money. A mega deal in the crypto world could bring in a new wave of retail investors into the space. Bob Pisani is at the New York Stock Exchange with more on this. Hey, Bob.
Hello, Melissa. Circle runs a cryptocurrency platform that allows large traders to trade Bitcoin. Today, they announced a deal to buy Poloniex. That's an exchange that allows trading in a large number of cryptocurrencies. Now, this is potentially an important deal for two reasons. First, it's fairly large. It's said to be worth about $400 million. That's large for crypto, but perhaps more importantly, it may help improve perceptions. Now, here's why. Crypto observers have often noted to me that these crypto-to-crypto exchanges have a lot of legal and regulatory issues. We know that, and that causes a lot of potential investors, particularly the retail investors, to be very reticent about getting involved. Now, Circle buying Poloniex may help give the industry a little more credibility. First, Circle has management credibility. And second, and perhaps most importantly, it has a BIT license. That's a license to trade cryptocurrencies from the New York State authorities. That's important. All this may help give confidence to the market. Now, Circle, of course, is hoping that it will improve their product and drive more business for them in particular. But the big issue is, does this Circle Poloniex tie-up create a legitimate challenger to Coinbase, which is the big guy in the space? Some feel that it does. So they say Circle has raised as much money as Coinbase. That's true. It's got legitimate backers. That's true. Goldman Sachs is behind this, too. It's got almost as many employees. It's got multiple products. It's got that regulatory license. And now with Poloniex, it has one of the largest exchanges that's out there. They seem to be saying there is room for another player in the space. Now, with regards to retail investors, Circle has communicated plans to introduce a retail-focused app, but they also want to host tokens that can represent anything of value. And this is from their press release this afternoon, including real estate, art and literature, credit, futures, and more. It's a pretty ambitious agenda. We'll see if they can carry through on that. Back to you, Melissa.
All right, Bob. Thank you. Bob Pisani at the New York Stock Exchange. For more on the future of cryptocurrencies and blockchain, let's bring in Ethereum co-founder and founder of ConsenSys, a software company based on the Ethereum platform, Joe Lubin. Joe, welcome to the show. Great to have you with us.
Thanks for having me.
So just, can you break down ConsenSys? This is sort of, it makes that interface a little bit easier in terms of using it.
ConsenSys builds software, mostly in the Ethereum ecosystem. We build software for corporations, for governments, enabling us to move from siloed walled garden systems to shared, trustworthy, fluid, collaborating infrastructure. We also build a lot of the infrastructure for the public Ethereum ecosystem, enabling us to process around 6 billion requests per day from the public system, and we build lots of applications on the Ethereum platform.
In terms of the platform, people will say that the cryptocurrency that is aligned with that platform, so Bitcoin to blockchain, Ether with Ethereum,
yeah.
That the success of that currency, that's sort of like the first app that exists on that platform. To what extent are these currencies and the success of the currencies a referendum on the success of the underlying platform?
Yeah, so first, Bitcoin was the first application in the blockchain space. Many people realized that there should be many more applications built on this shared trustworthy infrastructure. So we don't consider Ether a cryptocurrency. We consider it a crypto fuel because you need to pay small slices of Ether every time you run a program or store information on public Ethereum. And it is indeed a referendum on the success of the platform because demand obviously drives the price of the token, and there has been demand.
So Joe, it's been a pretty frenzied almost year and a half now in the currency space, but it seems like there's a lot of companies like yours that are actually finding a massive market with big, large institutions who want to implement this sort of technology. So to me, it seems like investors are thinking like this is like late 90s internet sort of thing, but I keep hearing developers saying, no, you got to take it a step back here. We're like late 80s. Kind of, where are we, and when will they converge?
So let's call it mid-90s. It is.
What's the difference?
Yeah, it's definitely the case that like the internet, like the World Wide Web, there was a period in which corporations weren't comfortable using the public internet, and they used intranets, basically the same technologies, but more private, more secure. We're seeing that with many large institutions. We work with quite a few of them, including governments. We're seeing them get their toes a little bit wet with the technology in a private permission context, while lots of developers are building out many different kinds of applications on the public blockchain, which can also be used on these private permissioned infrastructures.
In terms of the industries adopting Ethereum as a platform on which to build various contracts or whatnot, which industries are you seeing the most adoption that you're most surprised by? And has that changed over the past few months? Have you seen new industries really come at it hard and say, this is something we're really looking at right now that they weren't looking at a few months ago?
Sure, so I'm not surprised that any industry is interested in using this breakthrough technology. Early on, the financial industry, banks essentially jumped into this. Partly, perhaps they were concerned about disintermediation, but I think mostly they were interested in the efficiencies, the new business models that it would afford. We're seeing every industry jump into this. Any industry that wants to move from siloed infrastructure to essentially collaborating with their competitors within their sectors or industries, across industries, any sort of value chain that can house shared infrastructure for many different actors that want to compete but also collaborate. That's perfect for this technology.
So shipping, utilities.
Yeah, so supply chain, energy, insurance, banking, healthcare, education, we're seeing it everywhere.
Everything under the sun. Joe, it's great to have you with us. We hope you'll come back. Joe Lubin of ConsenSys, also a co-founder of Ethereum. This is one that you have been in.
Yeah, and again, it's because it's that platform that so much can be built on. And I think it's interesting, you talk about, IBM's role with Maersk in building, essentially a crypto to decentralized platform for the entire shipping network that they're involved in. Joe quickly mentioned that he's working with governments. I mean, one of the things, it's not proof of concept. The issues right now are all about regulation. To me, that's the biggest risk right now, and obviously it's the biggest thing that you need to see at the same time. But governments need to get in control of the flow of capital, and I'm not sure how they're going to reconcile this right now.
Yeah, I also think it's pretty cool that he referred to Ether as the fuel for Ethereum, and that's something I think that, as if we were to see a lot of these cryptocurrencies kind of settle out, we have that frenzied period over the last 5 months or so, and then people can really start focusing on what they are use cases for. And I think that's the point, that everything that's being built on the Ethereum network, or a lot of these ICOs, what you need Ether to kind of get into, then you can start kind of drilling down a little bit on broader investment themes other than the currencies that you can just buy on Coinbase.